AVAX is pressing against the same $10.50 ceiling that has rejected buyers more than once. The AVAX breakout question is not whether traders are excited. It is whether Avalanche can clear resistance and stay there long enough to prove demand is stronger than the selling pressure above it. A ceiling matters because traders often buy anticipation before confirmation. If the level rejects again, those early buyers can become sellers. The current range is clear. AVAX has been moving between support near $8.20 to $8.50 and resistance around $10.50. Support is the area where buyers have been stepping in. Resistance is the area where sellers have been strong enough to stop the move. Repeated tests of resistance can build pressure, but they can also exhaust buyers if the break never arrives. The range is narrow enough to be useful. It gives traders a clear invalidation zone instead of a vague claim that the asset is simply strengthening. AVAX recently rose to $9.35, showing a 3.88% gain in the last day cited by the available market data. That move keeps the token inside the range rather than above it. Some analysts point to $12.70, then $13.90 if $10.50 breaks. Those are conditional levels. They only matter after the chart proves that the ceiling has become support. A daily gain inside a range is progress, not proof. The market still has to show that buyers can absorb sell orders at the top of the band. If volume expands at the same time, the move carries more weight because more participants are supporting the break. Longer-term accumulation talk is also tied to the $8.50 to $9.50 zone. That area has been described as important because buyers have entered earlier during pullbacks. If that pattern continues, it can show diminishing sell pressure. But the range still controls the story. A token can look strong near support and still fail at resistance. For an AVAX breakout, the market needs follow-through above the level everyone is watching. Accumulation zones can support a recovery only while buyers defend them. If that area fails, the same zone that looked like demand can become a warning sign. Institutional interest adds context, but it is not a price guarantee. Bitwise introduced an Avalanche-focused ETF product, and high-volume wallet accumulation has been cited as part of the bull case. Those details can improve attention around Avalanche, especially if access expands for larger investors. Still, ETF branding and wallet activity do not replace the basic chart test. The $10.50 level is where the shorter-term and longer-term stories meet. The ETF context may attract attention to Avalanche's ecosystem, but price still needs liquidity and conviction. A product headline can start interest. The order book has to confirm it. The next signal is simple. AVAX needs to move above $10.50, hold that area, and show volume that lasts after the first push. If it fails, the lower range near $9, then $8.20 becomes relevant again. AVAX breakout talk becomes stronger only when resistance turns into support. Until then, Avalanche is still proving whether pressure is accumulation or just another rejected attempt. That makes the next candle less important than the next hold. A break that instantly falls back under resistance would be weaker than a slower move that keeps the level. Traders looking for confirmation should focus on where AVAX trades after the move, not only whether it briefly touches the line.